Market Musings podcast with Fairbairn and Russell. Welcome to the Market Musings podcast, where today is an exciting day because Doc Holliday is back joining us on the podcast after a bit of a break. We thought he'd retired, but maybe retirement was a little bit too boring. Doc, was it? Is that the truth? Is that why you've come back? Welcome back, by the way.
Well, it's lovely to hear your sort of soft, welcoming tones as opposed to Kenny's hard, aggressive, northern Scottish tones. So yes, no, I don't know. I mean, look, there's an assumption that my interest is to return in the same sort of guise as before, and that just isn't the case.
Okay.
Markets. And I've put a lot of time into markets over the years, and the break is something that I've enjoyed immensely. However, I've taken quite a bit of criticism prior to my sabbatical, if we want to refer to it as that for the time being, or sort of semi-retirement, regarding sort of COVID bubbles, top of the market action in certain areas. And they just frankly weren't welcomed, and nobody's going to be sitting on a podcast today sort of saying, I told you so. But quite clearly, you can see from the price action in lots of different companies, particularly over the last couple of weeks, that the wheels have well and truly fell off in that area. More interestingly, we've noted Russia's invasion of Ukraine, and interestingly, yesterday I saw that gold was flying and cryptocurrency was coming down. So it would appear that even the sentiment and momentum in that space has sort of subsided somewhat, albeit I do believe that crypto is here to stay, and it probably presents an opportunity at some point.
Mm.
So good to have you back, Doc, but you were happy to slag the Scots, my rough accent, but yeah, you were happy for me to do a border raid and give you Scottish gifts. I mean, what kind of example is that to set?
I mean, to be honest, I didn't realise how good a kiss you were, Kenny, to be perfectly frank. But yeah, you've blown me away with it. And as regard to the other Scottish gifts, they weren't as good as that physical one. But nonetheless, it was extremely enjoyable. And yes, I did eat all of the food that you gave to me and drink the whiskey. So thank you very much.
Yeah. No, we had promised to meet up for some time. We'd spoke often enough, so we'd put it off for, well, to be honest, most of COVID. We could never find obviously the Scottish restrictions were slightly tougher than the English ones. So yeah, so I think was it January? I think we met up. I can't even remember. My life's just a blur at the moment, Doc. So, but no, it was good. It was good to meet up, and you look totally different from the way you sound. So that's why you wandered about the Wetherspoons about 4 times looking for me, because I said, nah, that's not Doc. He looks too normal. I was expecting a Gerwin Price style guy coming in with his veins bursting out his neck and a big red face, ready to punch your head off.
Oh, you painted an incredible picture, Kenny.
Well, I've never seen him before, so I had no idea what he looked like.
I think I did see you before. In fact, no, I did see you. It was at an event. I think it was it Wolverhampton? Is that where they?
Yeah. It was,
yeah, I think I saw you there. Lurking.
We don't talk about that event either. I mean, I'm quite happy to, but I did actually give an undertaking to a certain individual that I'd be a lot nicer moving forward. So
yeah, I do remember that. Yeah, I do remember.
But yeah, look, I mean, to be honest, I think people always have a perception of what people are or who people are, and sadly, it's one of the sort of things with social media. It's prevented people from actually getting to know individuals on a more personable basis, and therefore, in the absence of that, there's loads of people sort of challenge one another in a variety of different ways. I mean, the only thing I would say is if I say anything about people in social media, I'm more than happy to say it to them in person and or over the phone if required. I'm not spineless and cowardice in that way, but unfortunately we're surrounded by a lot of that, and it's the downside to it. So yeah, I guess people paint a picture of what we think individuals look like or how they will act, and the reality is very different. Plus, I'm a bit old-fashioned, me, so Ken, had I been sitting around the table drinking pints of beer, talking to you, it'd have been a very different conversation than one if you were sitting with your good lady or your daughters or your sons or whatever. So a bit old-fashioned that way. I try and behave myself in in certain environments, and I can be totally reckless in other ones.
It's quite bizarre because people think I'm a big fat Scotsman and with a drink problem, and in reality that's what I am. So I just sound in social media as I am in real life. So no, it was good to meet up and just to bounce a few things round about and just have a laugh about life. And in reality, it was like, I don't know, 2 hours for me, Mike, to get down there. So it's not the end of the world. So,
but your retirement then, Doc, was that a retirement from the Twitter, or was it a retirement from the markets, or both?
Yeah. No, to be honest, it was. So the Doc holiday thing. I mean, I'm still not convinced whether it's a good idea. I kind of thought about it, probably because I've had a lot of time in January. Christmas is out of the way. Been a lot of time overseas and traveling around. Always do this sort of health kit drive January too. So I was out doing a lot more exercise. I've been out and about in the mountains a fair old bit, sort of around Kinder Scout and the Peak District, and up to the Carned Llewellyn around the Ogwen Valley and a few other places. So I've had loads of thinking time. And I'd realised that I do miss talking markets, and it was just testing the water to see what the interest was like, and it's been phenomenal. Obviously, there'll be a group of individuals who think that prick's back again. We thought we've got rid of him. He's like a bad penny, but look, it is what it is, and it was, Mark. It was a break from that sort of public facing figure of Doc Holliday. I just thought it was going the wrong way. The interaction was good, but not, as you get older, you want to become a better person. You want to be a better man. And I've done a lot of charity work that a lot of people aren't aware of for years and years and years, or voluntary work, if you want to call it that. I figured that on one side, you're doing lots of good things to create a lot of positive expectancy. And then on the other, I was rubbing people up the wrong way. And even if it was factual, even if there's 10 people who come out and say, I bought into this COVID bubble and sold because you made relevant points and, I benefited. The number of people that haven't benefited exponentially higher. And, one of the things I've learned is you cannot prevent the train from crashing. You just have to get off. And if you tell others that's what you're doing and they listen, great. And if they don't, then, that's their issue and not yours. I just figured I was going the wrong way. It was being taken the wrong way. And as an individual and a person, I want to focus more on the positives. I want to focus more on good things in life. And there's been a lot to, of that happening over the last year. So, it was a good break. I enjoyed it. I won't be coming back doing 10, 12, 18 hours a day, squiddling, looking at all these different things if you're fraudulently running a company, unless it stands out like shit on a white sheet. I've got absolutely no interest in that either. So I'll be focusing on making returns, making some money, finding opportunity, and I think we've seen all of the big top of the market action in the small caps. We've gone 6-9 months down the track. Things have been particularly difficult, none more so than over the last sort of few days and weeks with the Russia-Ukraine situation. And I think we're going to see a real change in direction, regardless what the mainstream narrative is.
Yeah, I think there's a change definitely due. I mean, you can almost say since May last year, it's been pretty dire. Would you agree?
Yeah, absolutely.
Yeah.
But there was loads of indicators to suggest that was happening because, the market was irrational. So rather than spend 10 minutes talking about all of the sort of facts of it, it was totally irrational. We had things that had gone up exponentially and for months and months and months have not actually demonstrated where that value should be within the business. And I'm not talking one or two companies. I'm talking like oodles of them. And then you had other companies that, seem to be absolutely battered, oil stocks predominantly, some precious metal stuff. And now you're seeing that sort of come back to life. So, I sat watching Petra Diamonds on a consolidated basis go from 75, 80p down to 50p to £1 today. If you look at the pace in which they're repaying the debt on an annualized basis, that debt is getting paid immensely quick. And, at some point, they're either going to ramp up their investment and go on an acquisitive drive with deep pockets of cash, or they're going to start distributing it back to shareholders. Free cash flow has to go somewhere, and it's going to make its way into growing the business or rewarding shareholders. So I see it at £1 today. I think it's probably going to be 200p And it very much reminds me of, Clipper Logistics when I talked about that all that time ago, which was £2 to, I think it's £8 data you're seeing it at one point. I mean, unfortunately, I'm not that smart, so I sold out on hindsight far too early. But trying to find these opportunities are where the money's at. So yeah, I mean, we're going to look at some of the small caps, the piddly things, and sensible things as well, like Clutch Diamonds.
Okay.
Yeah, no, there's definitely plenty of opportunities out there, Doc. I mean, there's loads of companies that have just dropped into this sort of £2 or £3 million market cap in AIM, and it's probably, in the height of the sort of bull run, a Shell was probably getting valued at 5 million. So there is plenty of decent ones out there. I mean, companies that I've invested in the past, like Arco sort of sticks out. It's probably, I don't think it's 2 million, just over 2 million at the moment. Obviously, they've got a nice zinc asset that's not really. Unfortunately, Arco are not the majority holder in that particular project, so they're the control of their major partner. But there's loads of examples across here, not just in the natural resource space, but oil and gas, and I'm sure there's tech companies as well that are in a similar position. If you've got cash at the moment, this is the time to be putting it in. It's just finding those opportunities and doing your due diligence. Cash is king. So as share action is great, but cash is king in these markets. If the company you're looking to invest in has got oodles of cash, then you've got some comfort that the share price will reflect that in due course.
I mean, I phoned up yesterday. I phoned up a broker that I use, and he said, what you're buying. But as soon as we put on what you're buying, because the market had been absolutely, was cratering. And I bought, believe it or not, the JP Morgan Russian Securities Fund. And he said, what? He said, what? I said, look, whatever cash is in my account, buy me the JP Morgan Russian Securities Fund or Tracker or whatever it was, JRS. And honestly, it was I spotted it just because it was on one of the biggest decliners, and it was the only way to get exposure to the Russian listed stuff that wasn't in the UK. And I think I was making sort of 15-20% from the lows. I mean, it's just crazy. I mean, you're talking about that sort of move shouldn't be happening in a day, but it did. And I think he was just surprised that he said afterwards. He said, "Mate, that was a great call, but like I thought you picked like shitty small cap things." And at the same time, he was working an order on a tiny little small cap pharma company that I thought was relatively cheap as well. So it just goes to show you having a sort of bit of variety. Is beneficial.
Well, we talked about that Rolls Royce, wasn't it? I think the last time we spoke, and that was moving like a junior. Crazy time.
Yeah. Talking about variety, and I know it's not everybody's cup of tea, and there's a bit of pain involved as well. But obviously, within the mining space, North America, in particular the TSX, it's got something like 70-80% of all the mining companies in the world are on those exchanges. So I have spent, some time in the last year sort of getting set up with North American brokers, because it's impossible to buy with some of the mainstream brokers in the UK. But there's definitely opportunities out there, so there is, and placing opportunities as well. So, like I say, it's not everybody's cup of tea. It's a bit of hard work. A lot of it's phone only. There's no online dealings, so you're into that realm where the people can be asked again. But I just think, if there's money to be made and you've got the patience and you're happy to do all the KYC, you can get on the placing deal flow with some of these brokers in North America. So that's something I've explored.
There's some immense opportunities. I mean, I know from, I remember many years ago when our friend Mr. Johnson had gone over there to, what's their little mining thing that they do? PDAC or whatever it's called, PDAC, that conference. Yeah. And back then you'd got companies that were $2, $3, $4, $5 million that over here would have been trading at 10, 20. And I think, some of the dialogue I'd had with him at the time, it was kind of like, well, if the value's there at this point and we're not even in a particularly strong market, there's going to be some belting opportunities. And I think I'm not surprised that individuals like yourself are looking out there. I think it's a great opportunity.
Yeah, you just need to look at the uranium stocks and the TSX. Obviously the uranium price is moving pretty quickly, and obviously the stocks have done the same. There is some there's so many. You could lose weeks and weeks and weeks doing due diligence in some of these TSX listed companies, and it's a whole new ball game because there's all sorts of different regulations, and it's trying to understand how they work their placings, whether it's an open offer or whether it's a broker that's dealing with it. So privately, it's for me, it's worth doing. Like I say, it's not everybody's cup of tea. So it's I just like opportunities to make money in different markets. If the markets in London are crap and they're flying in TSX.
Well, tell us some of the ones that you've looked at in London that are crap. Or, I mean, look, I'm happy for you to tell us what you've heard in Canada, but I mean, what are you looking at? I mean, you're looking at these sort of small bond out things. You seem to have had a history of doing well with them from when we last spoke. So, where's the next run of?
I'll probably rephrase that. I won't say crap. I'll just say what's the word for bombed out. People. There's no liquidity in the particular company, and the share price has been trashed. I mean, one that I have taken a reasonable sized chunk in is MetalNRG. I know it's had a bit of a checkered history, and I think some of it's been down to circumstances. Obviously, they came to the main market with a uranium project, and then promptly the company decided to ban uranium mining. So that's not particularly went well for them, but they do have some nice, interesting projects. I particularly like the Goldridge project. They've maybe stalled a wee bit. I don't know whether it's lack of funds, but they seem to be. I noticed yesterday on their Twitter feed, they seem to be back in the ground at Goldridge. So there's some movement there. They've got a relationship with ECTEC, which I think you know more about, Doc. You've dealt with ECTEC in the past, and obviously they're in a bit of a legal disagreement with the oil and gas side of the business. But the thing that interests me with that particular project is if the guys can resolve it, the two parties can resolve it, and they crack on. Oil's sitting at $105 a barrel, and these guys are producing it at $20 a barrel. So
these are assets in Poland, weren't they?
No, they're in the UK. These are UK assets that are producing. I think they're doing 100 barrels a day at the moment from memory. Don't quote me on that, but I think it was in the last RNS. I think it was like 3,000 barrels for the month. So there's definitely value there. The market is obviously smashed the share price. There was a CLN come into play. There was a placing at 0.6. It's available at 0.18 today. So I think just from you look at the assets around the company and the potential and the market cap, I think it'll have its day in the sun. And it wasn't that long.
I agree with you. I mean, I've got a few of these, and the mad thing about it is I thought for some reason, I mean, I only bought them on a very speculative basis, but I actually thought for some reason they'd shown some intention of going to Poland for oil and gas. But yeah, no, I mean, that just shows that. I mean, they've got plenty of assets, haven't they? They've got plenty of opportunity, but they're probably a bit thin on cash, and those convertibles are never well received. And that's what's happened over recent weeks, isn't it? Shares have gone from 0.3 down to 0.2 and below. Old roll fees in there at 0.6, so he's got to see it up considerably from where it is today. You're probably going to be right. It will have its day in the sunshine, but yeah, I mean, it's one of them. We'll stand by our beds and wait to see if we can actually deliver on any of these projects.
If you're prepared to put the money in, and I'm not going to say it's going to have its day in sun 3 weeks or 3 months. It might take 9 months, but I don't really care, because at the end of the day, I'm quite happy to be patient and just I'll get my exit point at some point, whether it's some or all the shares, I don't know. But no, as you say, Rolf is balls deep at 0.6, as are a few of other board members, I think, as well. So yeah, he's going to do everything he can to.
So there's a common theme here of like companies that get their assets, so they don't deliver on it quickly enough, they don't manage investors' expectations, and then they get spanked. And I've seen that only too well with Contango Resources recently, or Contango Holdings rather, which have got the Lubu project in Zimbabwe, which is the breaking ground there to produce metallurgical coal, which has seen a massive increase in value due to growth and expansion of steel production, predominantly in Asia. Africa and the Chinese have committed $1 billion of investment into Zimbabwe, and we know last week that the gold asset in Mali is 5 times bigger than they initially thought. And now they've got international parties plus local parties showing an interest to do a deal on the asset. And the shares go from 10p to 7p. They're trading a little bit stronger today and they appear to be back on track. But yeah, not being able to communicate the message in a way that investors could understand it has cost them a little bit.
But that's actually done pretty well. If you look in the last probably in the last 12 months, say, or maybe since the end of May when everything seemed to drop off, that's pretty much just sort of flatlined and held its own. So I know that sounds, that's not great, but actually in some of these market conditions, I remember seeing a chart a couple of weeks ago. It showed you how much these shares had dropped off in value. And some of them were in the 80s and 90%. So someone's flatlined for the last 10 months. It's actually not a bad result.
But then if you look at its peers like Ben's Creek, start looking at the size of the resource and what they can do with it in the market, saleability, things up at like 200 odd million quid market cap. It's towering over Contango. And I've said this loads of times. Either Contango is grossly undervalued or Ben's Creek is grossly overvalued. But it can't possibly be based on the numbers and the squiggly lines, to quote Malcolm Graham Wood. Can't be right that one's trading so far away from the other. So, look, I'm not sure Ben's Creek is. I'm not saying it's overvalued. Maybe it's fully valued. I know for a fact that Contango are significantly undervalued, and now have an even bigger stake there. So I've been involved in it for a couple of years, and I've really grown a chunky position in Contango. So yeah, those guys owe it to investors to see a bit of return. And a bit like you, MetalNRG. If I don't get 20p out of this, I want to show my ass in Woolies window. But I have said that before, just as well that Woolies went under, really. But
yeah. I suppose as well, one that we've both been invested in the past, stock, and it's just quietly creeping back up there just now without anyone really talking about it, is Nostra Terra. I mean, it was down about 0.3, I think maybe a couple of weeks ago, but obviously the oil price is helping things because it's a producer, but it's got a great location in that, I think it's the Permian Basin from memory, and there's majors drilling in there. So yeah, it's quietly doing its thing, and I'm quite happy. I mean, I've got a pile of warrants here, so I'll just sit and watch that one as it moves up through the gears.
The script on that one. I mean, I get some right old shite for commenting on it, but look, I mean, if they're doing 120 barrels almost a day, and we look at the oil price, I think at the last set of figures that have come out, he was selling his oil at $50, and he was selling his oil at $70. He can only be selling his oil higher because it's not traded any lower. So even if he's been a bit poor in fixing contracts at 80, 85, this thing's generating revenues over $3 million a year of revenue. It's got a market cap of 3 million quid. Permian Basin's big business. We know that 32 million was raised for AEX Energy. Not a big fan of it, but they've made an acquisition of a company in the Permian. Any assets that you try to procure in the Permian will have gone up significantly because of the sanctions that are being held in Russia. So the oil price is going up as a result of that. So values and assets are going to go up. I mean, if you actually, decompartmentalize Nostra Terra, you got rid of Matt Lofgren and you just sold off the assets, probably worth 4 times more than it's trading at today, if not more. So, it's a frustration for us all when you see things like Mosman that have got 50% of the production trading at 5 or 6 million quid. This is trading much lower. You look at things like GBP, TRP, they're in Namibia, we're hearing all that noise over there, but that noise over there is no stronger than the noise in the Permian. They're trading at big premiums. It's just a market, and look, we can't hide away from the fact that Matt's not necessarily the most trusted or well-regarded CEO in the market, but let me tell you, he's about to float a company over on the American market at a valuation which is dramatically higher than where we are today. So the American markets are prepared to back him inside, and they're prepared to have him as the CEO of a much bigger company with assets in Africa. So they don't think he's as bad as we do, and I think at some point there's going to be a correction. And they've just appointed the SDX director, Paul Welsh, to join the board too. So who knows? It might pick up eventually.
I assume you're talking about elephant oil there, Mike?
Yes, mate. Yeah.
Yeah, bizarrely enough, Red Rock have got a holding in that as well. That's another. I mean, we could talk about Red Rock for forever and ever, because Andrew Bell's been about since, God knows, it must be the early 2000s, 2004 or something like that, with Red Rock. But again, that's another one that's bombed out. I mean, I've been in and out, and I've had my hands burnt a wee bit as well with that one. But there is assets within that business as well that are particularly interesting, and especially the Kenyan gold asset, and obviously all the activity that's going on next door with Caracal Gold. It's only, I think, 40 kilometres away. So no, there's probably value there. It's just whether people want to back Andrew. And I know it's quite a hard thing for some people to do with his sort of track record of. He's a survivor. Let's put it that way. First of all, no matter what's happened, he's
he's a smart guy. Let's be honest about it. He is a smart guy. I could drink red wine and talk to Andrew about markets all day long. But the reality is if the general public don't like what you do, then the most productive thing for him to do would be to step back into the board somewhere, offer the support to somebody else who's pragmatic, and actually give them the reins to the business, because we've seen loads of these backseat driving chairmen and nobody buys into that anymore. But I think he could be a great asset to an expanding and growing company if he got somebody in there who was better, well regarded. And we saw that with Ben Turney at Kavango. Not that Kavango did a particularly bad job, but once he stepped forward, things got interesting. Once they got rid of the CEO at Crossfax Energy, they changed him. Shares were up, doubled and doubled again. So it's this type of, the market tells you what they want by the way that the price action moves. And we've seen it with just so many companies over the years that if Andrew wants the best of Red Rock, well, he's got an exposure to it as an equity and a stakeholder. I don't know why he doesn't just step back. It's not like the youngest guy in the stable anymore, is he? But anyway, egos unfortunately sometimes get in the way. But I do like Andrew as a person. He's a nice man. He's just not very well regarded, and he doesn't deliver things that he guides the market on. Very good.
Yeah. But again, it's another one you could put in that basket of companies that are sitting sort of, I think their market cap might be 3 or 4 million. Don't quote me on it again. I need to double check at the moment. But there's definitely a lot out there. Is there anything quietly that you're looking at that's really off left field, out the box?
Poolbeg Pharma. I mean, we know that Open Orphan have stepped back. Cattle Free will step back from heading up that company for a new guy, Molkan, I think his name was. He said that he'll stay hands-on and he'll keep doing everything that he's been doing, front-facing in the city, I'm sure. But he's got a big sort of seat at the table in Poolbeg Pharma. I know some of the people that helped him with Open Orphan are involved with Poolbeg. They raised 25 million quid to IPO that business. They've gone out and done taking a number of encouraging steps, but just due to market sentiment, they've been absolutely hammered. So yeah, I've been buying that near to 5p, and it's trading over 6 now. So I'm a happy bunny. I think it's a good little opportunity, to be honest. Listed IPOs at 10p, 25 million of cash. What's its market cap? I mean, I'm trying to get it up. I think it was about 31 million quid, 30 million quid. So, let's say they've announced some contracts. The expenditure shouldn't be massive. They've got loads of cash, drowning in cash. And in this market, particularly when you think about how poor ODX have been, grand old Duke of York, raising money at 5p, go and look at some of these other things, Gen Drive, and don't look too tidy. There's a lot of those things that were really popular once upon a time that are struggling, and they're struggling to raise decent sums of cash. So imagine you're sitting in there at Poolbeg Pharma and you think about what Cattle did with Open Orphan, where he acquired Venn Life Science and then he bought in HVivo. I mean, I don't think that the guys at Poolbeg are going to just sit there and do nothing. They've got too much money and there's too much opportunity in that space. I think that a lot of these guys focus acutely on COVID, and that's what's hurt them the most.
Yeah.
If you look at the likes of Open Off, and they've done deals with the government and big pharma. I think they've got contracts of about 40-50 million quid. They're booked up for the next 2 years in their facility in London, and they're expanding into other areas. Smart move, that. So it was a bit slower to the party. Everybody was sort of, having it off in the market with GenDrive and Synergin and ODX and all these other sort of businesses, Novacyte and Open Off, and were really slow getting out the traps. But you know what? They've held quite a bit of value here, and they're well cashed up. So they're not desperately trying to get the hat around to survive now the sort of sentiment's gone. So yeah, I think POLB, Poolbeg Pharma, could do well. So yeah, but there's a bunch of them. Yeah, I can sort of stocks all pairs, Yeah, what are you looking at, Mark? What's interesting you?
There's a couple of things interesting me. My portfolio hasn't changed at all, I don't think, in the last year. Still kind of hanging on in there. But just on the COVID thing and on those pharma stocks, I think there's been a lot of people got into that, didn't they, in the lockdown when there was lots of money around and people were at home, and we saw lots of new entrants into the market jumping on this kind of it's easy money. I didn't buy any pharma stock because I don't think I've ever bought a pharma stock in my life. It's just not my thing, really. And again, I thought it was a bit of a jumping on the old bandwagon thing, so I kind of avoided it. I could have probably made some money, but I didn't buy any. And of course, here we are, and it's a lot of them all the hype's died off, and then certain companies, is it ODX, Amiga, I think, that there was a terrible story that again was hyped up, and a lot of people have lost considerable money. The only other instance of that I can remember is with Sirius Minerals, and it's the same thing. It's getting too emotionally involved in a stock, I think, and putting in too much that you can afford to lose. And I think it's just an important lesson. I mean, everyone has to lose money. We've always said that. You lose money and you pay for your education on the market. And I think it's a hard lesson to learn, but you do have to go through it. But I think anyone who is listening who's fairly new entrant into the market, I would just say, look, just don't overexpose, and also don't look at the share price. Look at the market cap, look at the valuation, and if it's already gone up 100%, it's unlikely it's going to do another 100% as easily as the first 100%. And just don't put in more than you can afford to lose, and really, try to remain objective. Don't get too emotionally attached, because I remember reading the horror stories from Sirius, and I was reading the same things on ODX, I think it was last week, and it's a shame this has happened to people, but you take it as a lesson and hopefully, move on from that and learn from it. Because it can be very cruel. The markets can be very cruel.
We hear that caution all the time, don't we? All of these podcasts and interviews, and it's never more true than situations like the COVID bubble or the ODX scenario or Sirius.
Yeah.
Or I can go back over a decade at all the different ones that this happened to. But I think if the story just seems a bit too good to be true, and everything appears to be a little bit too easy, and the reality is, it probably is. You can't be the luckiest guy in town. It can't be this easy to make money from the market, because if it was, everybody would be doing it. And we know the vast number of people that participate in the market become losers by virtue of not learning quickly enough. And that comes from folks exposing to the market in size far too soon. They see others making money, greed sets in, fear of missing out, all of that sort of stuff. And before you know it, they're on the roller coaster. But I'd say that applies for all of the markets, particularly small cap markets. At any time, it's been a lot worse. In 21, it's been a baptism of fire for lots of people.
Yeah.
But as you say, if you're sitting out there and you've had a tough time of it, don't be totally disillusioned by things, because the lessons that you're learning and will pay the yield the biggest returns. And I'm certain that the wind of good fortune does blow across your bow. So I've sat in things that I thought, I think they'll do all right, but this will do better. And then it's always that one in your portfolio, and you go, shit, no, that was the one. I've spent all my time focused on this. My biggest position is in company A, and then company C or D that you thought looked all right suddenly becomes that big returner, and it just there is a little bit of luck in this game. I don't think you should rely on it, but you do get a bit of good fortune will blow your way eventually. It's just staying in the game long enough to be able to sort of have a push in the right direction. And there's people out there that'll do that. So for all of these assholes out there that talk shit, most of them do it because they don't really understand the business. But there is the odd pearl of wisdom, and there is the odd decent guy who'll say, you know what, Mark, I think you've got that wrong. This is actually where the value might lie. And those kinds of nuggets of information. Yeah, the priceless in this business, and we've all had them. There's no doubt about it. Everybody sits there professing to be the next best trader or market participant, whatever you want to call them in the world. But let's be honest, everyone's had a hand sign the shoelaces in the market at some point.
Oh, you need it. So you do need a good kick in the balls. But you mentioned oodles of cash, and there's one company we had on the podcast recently. It was AEX Gold out of Greenland. It's entirely a Greenland-focused business, which is a whole region of the world that's never really. There is producing mines out there, but it's a whole new ball game. And obviously, with ice caps melt, virgin land that's never been explored before suddenly becoming accessible and available. AEX have got something. The market cap's like 50 million. It's a chunky market cap, but they've got a massive portfolio of gold and critical minerals in their portfolio. There's probably enough for 3 or 4 companies within that particular company. I think they've got the largest land portfolio in Greenland. So that's something else that kind of it's caught my eye. The guy that runs it, a guy called Elder, is very, very competent, a good speaker. He's got a good deal history. He's from Iceland. He knows the area well. I think that's one to watch. It's not got a lot of retail investors in it. There's a lot of institutional guys in it, but I think they'll be keen to change that going forward. And with that,
it's been a place where, I've talked about this before as well. Greenland has been a place that is a hugely untapped resource. Very difficult to access some of these mines. So I remember that the BBC actually did a program, probably 2010 to 2013, somewhere around there. So you might find it if you look it up. And they were drilling the side of a mountain and then doing some explosives up there, and they were going in on like a bowman's chair on a helicopter and working off all sorts of mad sort of stuff. But the opportunity was insane, and that was gold. I think it was diamonds. It's littered with opportunity.
Yeah. EX, it's gold. It's gold. I think zinc. There's rare earths in there. There's copper in there. They've got a full bag of commodities. So they have, and like I say,
logistics are key there. Logistics are key, and if they've got good infrastructure and good logistics, then they're going to do very, very well. I'm all certain of it.
Yeah, fortunately, they're in the south of Greenland, which seems to be the area that's got the best infrastructure. Obviously, the north is a bit more. It's a bit more trickier to get access to, but no, it's certainly an interesting one that's kind of on the radar, and I think the shares are really, really tightly held as well because most of it's institutional guys. So no,
it's definitely interesting. As I say, Greenland is an unexplored piece of land mass, and how it was hostile before, but as Elder was saying on our podcast, how that's all changing. And I think we had Charlie DiGio as well tell us that his opinion that it could be Europe's answer to Australia for sourcing some of those raw materials. It's definitely an interesting. It's not far from home, is it? And that's the first company, that I'm aware of that's kind of involved over there. So it's definitely one to watch, and it'd be interesting to follow that story and see how Greenland develops over the next few years.
Absolutely, and if attitudes are changing, which was always historically, a decade or more ago, the biggest problem there. If attitudes are changing locally, then that's a massive tailwind for companies that are trying to operate in the region. So you need local support. You need people who not only can get some exposure and benefit from it, but also politically who are behind you and to develop Greenland as a country. I'm sure they're going to need it.
What about, I want to get your opinion, or both of you really. I know, Kenny, I think you recently bought, but oil and gas, which is can be very volatile, and you get destroyed if the well hits a dust. Then, of course, ADV, Advanced Energy, it was all quite looking good and exciting to hit that oil, and of course it didn't. And I think it was 85% down, and I mean, it's terrible, if you were invested in that, but that is the risk of oil, I understand. But do you think, Kenny, you thought it was quite almost like a value now, didn't you? Like, it's almost at rock bottom. Is that another kind of bottom?
I probably got it a day wrong, so I did. I thought it's at 0.7, 0.8 was where there was a bit of value, but obviously the market decided, 0.25, 0.3 was where the value was at. So I got that one wrong, and I'm sitting a loss, and it's fine. I'll just these guys are Leslie Peter Kimball. He's actually left now, so he has. But the other guys put a chunk of money in. So again, they'll be wanting to see a return on that investment. So it's a wee bit like the kind of Rolf situation. From memory,
the key difference though are the people that put the money in. They raised a lot of money, so they got a lot of support from good investors, and they had what looks to be a decent asset. And the board seems to be skin in the game, more conscientious. So I'm not saying that that Rolf can't do it and these guys can. I think Peter can have to walk the plank because he frankly didn't acknowledge the risk and look at 83% chance of success or whatever it was. I think it was fair. The narrative and commentary around it seemed to be relatively fair. It didn't work out, but I've got to say down here, ADV. If they want to try and raise money to do a transaction, who's going to back it? Who's going to back it bombed out down here? I think it's got to be trading. It's got to be liquid for people to want to put cash in. And I think they've got to be a bit more pragmatic. And the market's going to wait to see what they do next. So I think the likely chain of events with ADV is they come out and they sort of say, look, we've screened a bunch of different opportunities. We think this is the right one. We're going to do some more due diligence. It's X amount of barrels or X amount of whatever. And then suddenly the speculation will start. When the speculation starts, the price will move. Of course, they're going to raise money at some point, but they've got a bit of cash. There's no, they're not on their uppers, but they will need to raise some money to do a transaction. But I think they'll show us the caliber and the quality of the transaction first. And if that happens, the price probably runs up before they raise. And then, we'll start to see, because if I was an investor, given what's just happened, and I'm not talking about retail investors, I'm talking about institutional or family office. If I'd had that result based on what had been told prior, I want to sort of see a bit more flesh on the transaction before I want to support him again or support them again. So that's why I think there's an opportunity. And look, I've been buying shares myself. So it's one I like too. Thanks. Perfect.
Good. Yeah, I just got a day or 2 days wrong, but listen, it's just the way it is. You can never call.
So everybody's going ESG, Ken. Everybody's talking ESG. I mean, I've followed that Coral story again since Mark Hood and the guys went in there with some assets in Vietnam and the Philippines. COVID has absolutely killed them, as with many, many other people, from advancing things quickly enough. But we're seeing it everywhere. I mean, apart from Coral's opportunity in Asia, are you looking at anything else? I mean, ESG seems to be the buzzword of 21 anyway.
Definitely. All right, Mike. Well, believe it or not, that's nearly 50 minutes we've been speaking. It just seems to fly in, so it does. It doesn't seem that long ago we had you on for podcast 50. You were an exclusive guest for podcast 50, and here we are at podcast 100. And what is it, Mark?
55, I think.
155. It's crazy. So it is when you think about it. In 2 years, we've rattled out, I suppose, 155. What is it? 1.5 podcasts a week. It's not overly, busy, but just for an idea to suddenly, have 155 podcasts under your belt. I feel like a professional boxer that's undefeated.
It's content, isn't it? And it's the content that really matters, doesn't it, guys? I mean, look, the thing is if you've been an avid follower of the podcast from day one, they'll have seen you grow and develop as individuals. But They'll have seen the kind of companies that come on change. They'll have seen the kind of questions that you ask change. And the presentation will be different. And you know what? Because we have a bit of time under your belt, you also have something to analyze. You get to see how things perform, and you can learn a lot from it. So look, it's a useful tool.
Yeah. No, I still cringe at hearing my own voice. I don't listen back to them. Mark has suggested doing some video podcasts. I told him to fuck off. So no, I'll be sticking to audio only.
Okay. What about you? I don't know if I should call you Doc or Mike. What is the protocol now? I mean, how much are you?
Everybody calls me Doc, but Mike is my name. So I mean, I'm happy to be called either or.
Yeah, happy to be called either.
It's become one of those things. It's part and parcel of the way it is.
Are you camera shy though, Mike?
A little bit, but it's all part of the persona, isn't it? I mean, it's all part of the thing, isn't it? I mean, like Kenny said, I walk into a boozer to look for him, and he's like, who's that? Who's that little twerp? Reality is people have an image in the mind, and sometimes it's better to keep that. It's a little bit like the pretty girl, isn't it, that you see walking around, around the area, and you think, I wouldn't mind, bedding her, and the reality is in the morning she looks like shit. So look, sometimes you better not to spoil your own sort of fantasy, and unfortunately for Kenny, he spoiled this, so I don't want to spoil yours. But no, look, to be honest, I've done a meeting this morning on video. I'm not that comfortable with it, just because it's not what I know. It's not what I'm used to. But look, I'm not necessarily averse to it, but I love this thing of people saying, he's hiding behind the name and all the rest of it. But then you're spoiling it for them by saying, well, I met him for something to eat and he was a nice fella, or I saw you at an investor event, you weren't hiding. I mean, when I went to that investor event, I said I wouldn't mention it again, but let me tell you, I was told on no uncertain terms that I was a total piece of shit, and I'd be getting a clip around the ear hole, and also I had loads of threats made to me, and I still turned up there on me. So I'm not hiding. I'm not a person that hides, but at the same time, we don't have to be a hero to everybody. So that's a long-winded response, really. If I'm a camera shy, not really, no. But
right.
Like Kenny, he probably can get more out of himself by not putting the camera on, showing everybody he's sitting in his thong, than he would do if he was just talking on audio.
Yeah. Mark loves himself in the camera. He loves it, so he does. That's why he wants to do it, which is fine because he's a true professional. I'm just.
It's just another medium, isn't it? You see a lot of podcasters do the video as well, but I know it's not for everyone. And
maybe we do the video, Mark. Maybe I'll come and do the video with you, my friend. Just to make Kenny feel okay. We'll maybe have a go at that.
You maybe do that. Yeah. But I mean, there's so much to talk about. I mean, we can talk about a couple of ones that I hold next time maybe, but it's been really great to have you on again, Doc. It's nice to hear. I'm glad you returned. It has been a slightly different world without your presence, so I do hope you will come back again and talk to us in the not too distant future, and we'll see you around on Twitter a bit more.
Much appreciated.
Right, cheers for your time, Mike. We'll catch up soon.
Yeah, thank you, Doc.
No worries, man. No worries.
Thank you for listening to another podcast from Market Musings with Ben and Russell. Tune in next time.